morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, November 19th. Mixed but mostly higher trade here overnight as wheat prices are up another 2 to 3 cents, adding a little bit of more war premium back into prices. Corn is steady to about a penny better. The bean complex is sagging here a little bit now, down 4 to 5 in the soybeans. Meal is steady to a little bit higher, steady to a little bit lower in the oil. Speculative traders, they were net buyers across the ag space yesterday, adding almost 10,000 contracts to their long position in corn. They also bought roughly 6,000 contracts of soybeans and wheat, reducing their short positions in both here. Only light buyers in both the meal and oil. Open interest was lower across the board yesterday, with the exception of soybeans. Fresh news is somewhat scarce here this morning with the U.S. harvest now largely completed. The USDA did update winter wheat planting progress and conditions yesterday afternoon. 94% of the crop is now planted, matching the pace from a year ago, while conditions improved 5% to 49%, good to excellent. This was better than the 3 to 4% increase that was expected, and winter wheat ratings are now the highest in 5 years. This, as recent rains across the U.S. southern plains has continued to ease drought conditions. I look for further easing of drought ratings here later this week across the U.S. Midwest and southern plains as another system pulls through over the next 24 to 48 hours. Behind this system, temperatures do turn considerably cooler, which are actually more in line with mid-November readings. In South America, weather here is also mostly favorable as rains are expected to spread across some of these recently missed areas in central Argentina and southern Brazil by the end of November. These rains, if realized, I think will largely limit upside potential, particularly for soybeans as we approach the most yield-sensitive time frame in December and in January. Export inspections yesterday, they were really only so-so, but the USDA did make flash sale announcements across the soy complex in beans, meal, and in oil. U.S. prices remain competitive in the global marketplace really through the end of January for much of the soybean complex. December corn that continues to rebound nicely from last week's pullback and test of moving average support below the market. I think we'll see another run at taking out that November high at 434 3/4 as U.S. demand remains strong, while farmer selling is light here. Reluctant sellers here of the recently harvested crops. The D's March spread continues to firm, reaching a fresh 5-month high overnight at 10 cents. Jan beans, that has overhead resistance at both its 50 and 100-day moving averages at 10.22 and 10.32.5, respectively, levels that I think we're going to need a more threatening South American weather forecast if they are to be breached. Diesel oil seems to be consolidating just below the 46 cent level, with a lot of uncertainty looking forward with the expiration of the $1 per gallon blender credit that expires here at the end of the year. Diesel meal can't seem to really get a whole lot going here to the upside, with prices just above their recent contract lows. We do have major support below the market in the August of 2020 low here at $280 a ton. And wheat prices, they just continue to draw support from news over the weekend as the Biden administration is now allowing Ukraine to use U.S. missiles to launch strikes deep within Russian territories. The upside, however, would appear to be limited with ongoing harvests in the southern hemisphere and improving conditions here in the U.S. Meanwhile, U.S. demand remains pretty weak here as we are largely uncompetitive in the global marketplace. Thank you for listening, everyone. I hope you have a great day.